Welcome, everybody, to a new analysis of trendomics. My name is Dario, and today we're going to focus on BlackRock. As usual, we're going to apply the T-cycle analysis, a statistical mathematical way based on cycles to predict, in a statistical way, the future direction of the price. If you want to know more about this technique and the methodology that we are applying, click on the pop-up banner menu so you can have a look at our introductory video. So let's get started with the BlackRock, and this is a particularly important analysis because I would like to highlight the fact that in particular market conditions, not even the earnings can change the direction of a specific setup of algorithms. With algorithms, I mean the HFT, so the high frequency trading that funds, hedge funds, banks are using on a daily basis to operate on the market to buy and sell specific bunch of stocks. So before getting into the nitty gritty of what we can forecast for the next days, let's jump a little bit back to this law to give you an understanding how we ended up with our forecast. So with this law, we started a T plus 6, which is two year cycle that has been divided as the first downward yearly cycle, um, divided by in the first T plus 4 6-month cycle and a second T plus 4 6-month cycles. You can always check up on the reference years on the left for the duration. Um, in order to come up with the definition of the cycles, we gauge every time the duration of the days between the two significant lows that are called swings. So here we have 130 days, and in the second T plus 4 6 months downward cycle, we have had a total of 157 days. So the total duration of the yearly downward cycle has been of 261 days, which is a medium duration between 190 days, which is the minimum duration, and 338 days, which is the maximum duration of a T plus 5. As the other flip of the coin, we can always, or we must, check the upward cycles that are basically linking top with other tops. So from this top here, T plus 5, we have had a first 6 months upward cycle, T plus 4, with a total duration of 118 days. And from that T plus 4, we have had a second upward 6-month cycle with a total duration of 158 days. Therefore, if we sum up the total duration of this yearly upward cycle, we end up with a total duration of 275 days. 275 days is, I would say, more than the median duration of a T plus 5. And if we take into consideration always this stop occurred on the 2nd of February 2023, to today's date, we end up with a total duration of 299 days. This is an important key element for the conclusion that we're gonna state in a minute. So let's have a look more closely to what had happened since October 2023. In October 2023, we have had a nice uptrend that has been divided in the first T plus 3, and now we are having a second T plus 3 ongoing. The total duration of this yearly downward cycle has arrived at 114 days. But this second T plus 3 is divided in the first monthly downward cycle and this second monthly downward cycle. Now, if you're going to look at the introduction to the T cycle analysis, whenever a cycle is broken um, to the minimum or to the low from which it started before its minimum duration, and a T plus 2 is between 24 and 44 days, the extension of the cycle can be just to, in this case, to the downside. Because here we have had a duration of 17 days, which is not enough to close the T plus 2. So we might expect further downtrend at least to its minimum duration of 24 days. Because with this candle here, with this long dark red candle, we broke up the minimum at $792.82. And we broke up this minimum after 12 days. So the expectation is to further go down in order to close this T plus 2. But also from this top, we have to ask ourselves which kind of upward cycle has started. Because after the closing of a T plus 5, we might have either a Bayes tongue or a beginning of a new T plus 5. And the beginning of a new T plus 5 encompasses the fact that we cannot go back to the stop for at least 3 months. So we cannot go back to the stop before a minimum duration of 2 degrees less of the cycle we are focused on. So T plus 5 minus 2 degree is T plus 3. And the minimum duration of a T plus 3 is exactly 48 days, as for the legend here. Therefore, we cannot go back to the top before the 15th of May 2024. If from here we have the confirmation that a T plus 5 is on the edge. Now, the situation is that we at least have a T plus 4, but not a T plus 5 because we have to wait for its minimum duration. But the fact that with this minimum here, we have already broken this particular checkpoint and also this swing, makes me think that the chances to go back to the top, even if there is still time, because we are at 299 days with today and tomorrow will be 300, is particularly seldom. Which means, in other words, that we have 38 possibilities to go up back to the top, and we have more than 300 possibilities to go back down. So we have less than 10 or roughly 10% of chances, thanks to these earnings, to go up or back to the top, and the 90 or roughly less than 90% of the chances to proceed with the downtrend. Also because here the T plus 2 is not over yet. And in order to give you a better idea of what I mean is the following. So here we have had a negative downward T plus 2. Negative because the low in which it ended up was lower compared to the low it started. So here we risk to have a similar situation as it happened in August. And the fact that we can further go down to close the T plus 2, we allow also to close at T plus 4. And this T plus 4, for the time being, it has lasted 114 days. So we still have time until 168 days to proceed to the downside. So be really careful with the earnings. We have different signals, especially here, that more than or roughly 90% of the chance it will be to the downtrend, and just as roughly 10%, 11% of chances to go back to the top. So be really careful. And I hope that this analysis has given you really valuable insights to plan your trade accordingly. So thanks for watching, and see you to the next episode.